Hello and welcome everyone. How are you all? Hope so all of you are fine and just confirm me if you are able to see the screen, audio, video, everything is fine so that we can start accordingly. Yes. Okay. So in the last class, we have started one topic called depreciation. So what do you mean by depreciation? That we have got a bit of the introduction from the examples which we did. So today we are going to do the practical application of how the depreciation needs to be recorded and how the accounting entries will proceed into our systems for the depreciation. So that is the objective for today's session. Okay, now as I shown you before, see, I have two cars over here. This is the brand new car which is taken out from the showroom. Okay, and this is the old car after 10 years. It is the condition. After 10 years, the from this to this. Now, if I say that I purchased this car, the new car, the brand new car, on what price? The price of the brand new car was rupees 40 lakhs. I paid 40 lakhs for this brand new car. But now, if I say this condition of the car, what should be the price at this condition? So the price of this car would be rupees. Let's say it is a scrap value 10,000. The scrap value of the cars is 10,000. So what I can say from this scenario, the value has been reduced from 40 lakhs to 10,000, just 10,000 rupees. So how much is the fall if I calculate? The fall is of rupees 39.90 lakhs. That is the price which is reduced from 40 lakhs to just rupees 10,000. Okay. Can I say this is the fall in value and can be estimated when we will purchase the car? Can I say this is the fall in value and can be estimated when we will purchase the car? So at the time of purchasing, what factors I knew already? So the first factor was the cost. It is rupees 40 lakhs. I know the scrap value, the cost of the iron which is over there, it is just 10,000 rupees. I know the max to max, this car will be having a life of 10 years, not more than that. So can you calculate depreciation as per straight line method per annum? Can you guys calculate the depreciation as per straight line method per annum? Try and solve this question. You will have 4 minutes to solve this. Okay, I think सभी का आंसर आ गया होगा. All of you must be able to solve this. So what is the formula which we have learned? The depreciation per annum would be rupees 40 lakhs minus the cost, that is 10,000 rupees, sorry, minus the scrap value and divided by the 10 years as the useful life. So this is the cost minus scrap value divided by the useful life. That is the formula which I am using to calculate the depreciation per annum. So from this formula, the yearly depreciation would be 39 lakh 90,000 divided by 10. That would be rupees 3 lakh 99,000 per annum. 3 lakh 99,000. So now I have a new question. I think this was the correct answer given by all of you. My dear, today I have a little problem with the Teams. I'm not able to get the Q&A, so I'm not able to view your answers. Okay, there is no comment section available on this portal right now. But let's try to make this conversation two-way so that I will give you the time, you can do your question and then you can understand what I am explaining later on. So now the question is, what shall be the accounting treatment for 3 years since the asset was purchased as on 1st of Jan- so asset was purchased on 1st of January 2020. Your year end is 31st of December every year. Your year end is 31st of December every year. So that is the year end which we need to consider right now. Okay, and according to this, we need to pass the necessary journal entries which are with respect to recording this asset and charging the depreciation. Okay, so now whenever I have purchased the asset, what is the date on that particular day? So it is 1st of January 2020. I have purchased, let's say, a car. So car is a fixed asset, car account debited. What was the purchase value? Sir, it was 40 lakh rupees. It was 40 lakh rupees. Two, let's say I made the payment from the bank account. So it would be 3 lakh. Being car purchased. Now, every year, this car will be used by me. Every year, this car will be used by me. And for using this car, there would be what? Depreciation which will be charged. Why depreciation will be charged? Because there would be normal wear and tear. That means there will be normal little bit scratches when I take the car to the market. Okay, that is normal one. Little bit of accidental damages, and it will become obsolescence. That is, this car will become old after a period of time, and after obviously 10 years, there would be a new car or new version available at the same rupees. So this car will become obsolete. So that is why I need to charge the depreciation. So depreciation is charged at the year end. So my year end would be 31st of December 2020. I will charge the depreciation. By depreciation, what will happen? the value of car will go down. The value of car will go down. So I have to credit the car account, and depreciation is an expense. So I will debit the depreciation account. So depreciation account will be debited. What is the depreciation which we have calculated? It is 3,99,000. So here it would be 3,99,000 depreciation account debit to car account 3,99,000. Now let us prepare the car account and the depreciation account and the P&L account. So we are preparing the leisure car account. So on 1st of January 2020, I have purchased the car. To bank account, how much? 40 lakh is the amount. So this is my amount column. This is my date column and particulars. Same way here, this will be my date column. Okay. Now I have purchased the car, so I have written on the debit side. But at the year end, when the value of car will fall down by depreciation, so what I will do on 31st of December 2020, so this entry will be passed. My car account is being credited. So on the credit side of the car account, I will write it is credited because of which account? Depreciation account. So here I will write on the credit side by depreciation account 3,99,000. How much amount? 3,99,000. The depreciation account. So depreciation is nothing but a non-cash expenditure. Why non-cash? Because no cash is going out from this expenditure, but it is an expense which is charged. So it is a non-cash expenditure. Okay. So on 31st of December 20, depreciation expense account will be debited because it is an expense. By how much amount? 3,99,000. So if I want to close my books of accounts, if I want to close my books of account, what is the balance left in my car account? Right now, on the debit side, you can see I have 4 lakh rupees, sorry, 40 lakh rupees as a total. So what is the balance carried down? What is the balance value of the car left on 31st of December 2020? That would be 40 lakhs minus 3,99,000. So it is 36 lakh 1,000 rupees. So this is the value of my car account, which will be shown in my balance sheet. So if I'm preparing the balance sheet, there would be two sides. Everybody know I have one liability side and I have one asset side. So on the asset, there would be car whose earlier value was 40 lakhs, but there would be a depreciation which is charged, that is 3,99,000. So now the value will become as 36 lakh 1,000, which will be shown at the amount column. Am I clear, everyone? Is it clear to all of you? So this is the treatment in the balance sheet. Now let us go to the depreciation account, where this balance will go. This is an expense. So after the close, this will go to the P&L account. So by P&L account, it will be on 31st of December 2020. So I need to pass one more journal entry to transfer this depreciation expense to the P&L account. So again, 31st of December 2020, I will transfer this expense, that is P&L account debited with 3,99,000 to depreciation account 3,99,000. So this will be, depreciation will be transferred to the P&L account, and in my P&L account it will be shown on the debit side to depreciation, because P&L account was debited and expense always shown on the debit side. So this would be the whole accounting treatment for year 2020. Now, now let us try to do this, because in this question they have asked 3 years of the accounting treatment of this asset. Now let's go to the next year, that is year 2021. So basically you have already purchased the car for which you have passed the entry on 1st of January. Now obviously it is purchased, so no entry will be passed for the purchase, but at the year end of 2021, 31st of December 2021, again depreciation will be charged because it is charged annually. So depreciation would be 3,99,000 to car account. Again 3,99,000, and transfer of depreciation to the P&L, it would be P&L account debited with same amount 3,99,000 to car account. Sorry, to depreciation account. So from in your leisure perspective, if this balance was carried down on 31st of this balance was carried down on 31st of December, it will be brought down on 1st of January 21 to balance brought down. So here both the sides have a total of 40 lakhs. This balance will now be brought down over here. It will be 36 lakh 1,000. Now again depreciation will be charged on 31st of December 21 by depreciation account. How much? The same amount, because it is straight line method, and then we will have a balance of, at the year end 2021, debit side total is 36 lakh 1,000. Credit side total should also be 36 lakh 1,000. So I need to deduct 36 lakh 1,000 minus 3 lakh 99,000. So it would be 32 lakhs 2,000. That is the value which is being carried down, and in the next year on 1st of January 2022, this value will again be brought down. So from here it will come to the next year, because the remaining value is 32 lakh 2,000, and again depreciation will be passed. So by depreciation account 3,99,000, and then balance carried down. So 32 lakh 2,000 minus 3,99,000, it becomes 28 lakh 3,000. So by this, my total on both the sides will come as 32 lakh 2,000. So every year in this way, the depreciation will be charged. Till how many years it will be charged? Up to its useful life. Its useful life is 10 years. So up to 10 years, the depreciation will be charged to 10 years. Okay. And the journal entry which I have done for 2021. Only the date will change. Will become 31st December 2022, and this will also become 31st of December 22 and 23 and 24, 25, 26, 27. Same entry will be done. Depreciation account debit to car account. First to the depreciation charge and then transfer of expense to the P&L account. That is P&L account debit to the depreciation account. So same entry will be repeated how many times? One time it is done already. This will be repeated 9 times because 10 years I need to charge. So if you see your depreciation account, first one was closed where we booked the depreciation on car 3,99,000 and transfer it to P&L. In the next year also 31st December 21 depreciation will be charged 3,99,000 and again it will go to the P&L account. So this account will be closed over here. Then again depreciation will be charged 31st of December 22 for 3,99,000 by P&L account. So this is very easy. Yes, beta, it is easy, but we will bring out the complications very soon. Okay. So have you understood the concept of depreciation? This is how we will charge a depreciation every now and then. Can you guys also try one example where we will have some more calculations in detail of depreciation? Okay, I am giving you one question. A Limited has purchased furniture of rupees 60,000 whose useful life is 3 years. After 3 years, it was estimated that the furniture can be sold for rupees 6,000. The furniture can be sold for rupees 6,000 as scrap. Okay. In or write it as actually the furniture was sold after 3 years for rupees 5,000 only. Pass necessary journal entries and prepare and depreciation account. So this is the whole question which I have given you. Only the last part you can ignore this right now. Okay, just ignore this because I need to explain you this. But for the whole upper part of the question, it is the same which I have explained you right now. So try this. I will give you 10 minutes. I think 10-minute maximum are enough. So you will have 10 minutes. Solve this full question by yourself. Okay. You need to pass the journal entries, first step, and you have to prepare the furniture and the depreciation account. Okay, start doing it now. Last 1 minute. Bye, guys. Okay, let's start solving this. So we will go step by step for everyone who can understand this from scratch. Okay, so for the journal entries, we will prepare our format. This we are going to do very systematically because every concepts will be understand by all these examples. These are the basic examples. So we have the columns, date particulars, ledger folio, amount debit and amount credited. Okay. So that is the first thing which we have done. We will also prepare the ledgers at the same time so that we can do the entries whenever done the we can do the ledger postings whenever we are done with the ledger entries. So I will have a bigger account for furniture and one account for depreciation as well. So here also we will have date, then particulars, and then we will have amount column. Again date, particulars, and lastly amount. This amount in debit, credit, and here also amount debited and amount credited. Okay, we are done with the formats and let's start working on this question. So as per this question, we will prepare our solution. Furniture, that is rupees 60,000. Scrap value which is estimated is 6,000. and life is 3 years. So depreciation as per the SLM method, I have taught you only one method right now. So SLM method, we have the cost minus scrap value divided by the life. So depreciation per annum according to this calculation would be 54,000 divided by 3. And this will give you 18,000 rupees. So that is the depreciation which you need to charge per annum. This is the per annum calculation of your depreciation. Okay, let's assume this furniture is purchased on 1st of January 2020. So on 1st of January, if I purchase this furniture, so there would be furniture account debited. What was the cost of furniture? It was 60,000. 2. Bank account. I'm not writing the narrations. You already know the narrations. So that is the first journal entry which we are going to do. When there will be a year end on 31st of December 2020, we need to pass the depreciation. But before passing the entry for depreciation, let us do the posting of this journal entry. Okay, so furniture account is debited and bank account is credited. So on the furniture account on 1st of January 2020, I will write to bank account. How much amount? 60,000. Let's prepare bank account also. Although it is not required in the question, but if you are doing the full accounting, let's prepare the bank account also. Okay, so bank account was credited on 1st of January 2020 by furniture account. It was 60,000. It was rupees how much? 60,000. Okay. Now the first journal entry has been passed and it is posted to the ledgers. Now on after 1 year, we will charge the depreciation. So for depreciation, what I will do, I will reduce the value of asset, depreciation account debit to furniture account. This is the first year. So 18,000. See, basically the asset is purchased on 1st of January and on 31st of December, this is full 1 year. Full 1 year. So that is why I am charging the full depreciation of 1 year. But if the asset was purchased on 1st of June or let's say 1st of July 2020, and I am closing my books on 31st of December. So there is 6 months. So there is how much? 6 months. So depreciation will be also be charged for only 6 months. So I need to do that calculation. I will multiply by the months for which it is used and divided by 12. So it will be rupees 9. Depreciation will be charged for the first year. Why it is so? Because the time which you have used, it is only 6 months. That is the reason your depreciation will be prorated. Prorated means it would be prorated according to the month it is used. But obviously this is not the case in our scenario. So I am just removing that, but explaining you that if this was the case, what we would have done it. Okay. So here we have debited the depreciation account and credited the furniture account. With the same thing, I will also transfer the expense to the P&L. So this would be P&L account debited with the amount of depreciation, which is 18,000 to depreciation account, that is again 18,000. So this would be my third journal entry for the year 2020. Now let us do the posting. So in the second entry, we have debited the depreciation account. So on the debit side of depreciation account on 31st of December 2020, it will be debited by 18,000. That is to furniture account. And if we are entering on the debit side in the depreciation account, so on the furniture account side, that is 31st of December 2020, by depreciation account, that would be 18,000 rupees. Okay. Now, if the year is closed over here on 31st of December, what is the balance? On 31st of December on the furniture account, 60,000 is on the debit side, only 18,000 is on the credit side. So the balancing figure would be by balance carried down 42,000. 42,000 is the balance which is being carried down. Is everyone comfortable with this? Yes or no? So whichever balance is being carried down in the next year, 1st of January 2021. So from 20, we are now coming to 2021. This will be to balance brought down. How much balance was left earlier? It was 42,000. It was 42,000. Okay. Now again, this would be year 2021. What journal entry we will do? At the year end of 31st of December 2021, again depreciation account debit 18,000 to furniture account 18,000. Then on 31st December 21, again I will transfer it to P&L. So P&L account debited with 18,000 to depreciation account 18,000. So for the accounting treatment, what we will do? Now again in the furniture account, we will charge the depreciation on 31st of December 2021 by depreciation account. How much? Sir, 18,000. In the depreciation account, I will again 31st of December 21 to furniture account 18,000. And obviously in the earlier year, this will be transferred to 31st of December 2020 by P&L account 18,000. So both debit and credit side is tallied. And again, in this year also, we have transferred it to P&L account. So by P&L account 18,000. So this account will be closed. And obviously, accordingly, your bank account will be closed. You will have some opening balances from which you have paid the 60,000. So the balance then will be brought down. So we are not doing the bank account as a whole, just the relevant transactions which is given in this question. That's what we are performing right now. Okay. Okay. Moving on. In the last year. So here we will do the balancing now in the furniture account. But earlier balance was in the opening, it was 42,000. Now depreciation again charged 18,000. So what is the balance now remaining? 42 minus 18, that would be 24,000 as by balance carried down. So total would be 42,000 here and 42,000 here. The accounts are closed. Whatever is the closing balance in the last year, it will become the opening balance in the next year. So from 21, now I have come to 1st of January 22. This is the last year which the furniture will be used because the life of the furniture was only and only 3 years. So this would be opening to balance brought down 24,000. Okay. Now that would be the balance carried out rupees 24,000. Sorry, balance brought down from the earlier year rupees 24,000. Now we need to do the general entry for the year 2022. Again, on 31st of December 2022, depreciation account will be debited by 18,000 to furniture account rupees 18,000. Now, before closing the books, we will do one more entry. But first, let us understand the impact of this entry which we have done right now. So depreciation account would be debited and the furniture account would be credited. So furniture account, it would be by depreciation account. How much is the depreciation? Sir, it is 18,000. And in the depreciation account also on 31st of December 22 to furniture account, again 18,000. Okay. Now what to do? Now what to do? Can I do the balancing here? Everyone tell me. Can I do the balancing over here? Answer is no. Why no? Because in the question, this is the new part. They have sold this furniture for how much after 3 years for rupees only. So can you assess where is a profit or a loss in selling this? Now looking at the furniture account. See, I have a opening balance of furniture of 24,000 and a closing balance of and a depreciation of 18,000. So what is the value of furniture as of now? Value of furniture as on 31st of December 2022. That is date of sale. So it would be 24,000 minus the depreciation, that is 18,000. So the value is 6,000. What is this 6,000 in actual? See, in the question, we have already mentioned that the furniture can be sold for 6,000 as the scrap. So that is why 6,000 is remaining. We have applied the formula considering 6,000 as the scrap value. But what happened actually? What happened actually? In reality, this is sold for only 5,000. So there is a loss of 1,000. How we are going to identify the loss? Just look at your furniture account. From your furniture account, now if this is sold, so if I want to sell my asset, what general entry I need to pass? It would be 31st of December 22. I will get the money if I sell it. So bank account will be debited with 5,000 rupees. How much money I've received? 5,000. 5,000 rupees. Okay. But what is the value of furniture? What is the value of furniture? The furniture value as on date is 6,000 rupees. So on the debit side, I have on the debit side, I have 5,000 rupees being debited, and on the credit side, I have 6,000 rupees debited. So what is this 1,000? This 1,000 is the loss on sale of furniture. It is the loss on sale of furniture. Okay, this is the loss which we have created. This is the balancing figure. Now, if you see your furniture account, you can calculate. So you have sold the furniture for how much? 5,000 rupees. Now this furniture is no more left. So what is the total on the debit side? It is 24,000. On the credit side, the total is 23,000 right now. So if there is a balancing figure over here, if there is a balancing figure on the credit side, that means it is a loss by loss on sale of furniture. This is the loss which we have calculated. This is the balancing figure which we have calculated, 1,000 rupees. Where this loss will go? This loss will go to the P&L account, and depreciation will also go to the P&L account. So my furniture account is now fully closed. Furniture account is fully closed. But for the journal entry, I have booked right now loss. Now I need to transfer it to P&L along with the depreciation. So what I can do on 31st of December itself, P&L account debited to depreciation account, because depreciation also need to be transferred to P&L, and loss on sale of furniture account also. So loss on furniture of account is 1,000, depreciation is 18,000. So my P&L account will be debited by 19,000. So 19,000 will be booked in my P&L. This is the full accounting treatment. So my furniture account is closed. That is done. On depreciation will be transferred to the P&L, which we have done the accounting entry by P&L account. This would be 18,000. And at last, bank account, we have received the money. So how much money we have received? It would be 5,000 rupees. 5,000 I have received. On what date? On 31st of December 2022. So that will be debited in my bank account. So this is the full accounting treatment. If anybody asks me to prepare the loss on sale of furniture account, so nothing on the debit side you need to write as to furniture account. Sir, why you're writing on the debit side? See the furniture account. In the furniture account, it is mentioned on the credit side. It is mentioned on the credit side. So in the loss of sale of furniture, what I will do, I will write it on the debit side to furniture account, and then it will be transferred to the P&L by P&L account rupees 1,000, and this account will also get. This is the full accounting treatment of the depreciation. I hope each and every point is clear to all of you. I have given you several examples and actual application of the depreciation. We need to do some theory as well, but yeah, the practical application of depreciation is covered right now. Now we need to do some complicated cases where, for example, three furniture are purchased. Furniture 1, furniture 2, and furniture 3. One is purchased on 1st of January, second is purchased on 1st of July, third is purchased on 1st of September. So accordingly, you need to calculate the depreciation for all of the three. And there might be a case that one of the furniture is sold. So we need to calculate the profit and loss on sale of that furniture. Okay, so that complication we need to do. We will do it whenever we will have some examples. But up to this point, there should be no doubt from your end. Okay, if there are any doubts, let me know. So let us just complete some of the theory. What is the depreciation? What is the everything? So basically, there is an Indian Accounting Standard 6 that states that depreciation is allocated so as to charge a fair proportion of the depreciable amount in each accounting period that is during the expected useful life of the asset. So obviously, if I purchased any asset for 10,000 and it has a life of 2 years, so I will charge 5,000 from year one and 5,000 from year 2, assuming it has no scrap value. Okay, but if they say out of this 10,000, the scrap value is 2,000 rupees. So how much is the expense? 8,000 is the expense. How much year it belongs to? Sir, it belongs to 2 years. So I will charge 4,000 from year 1 and 4,000 from year 2, because the remaining 2,000 I will get when I sell this. Okay, so the concept is very, very clear conceptually as well as the formula wise. That is the depreciation we are talking about. There are some useful terms which we say. First is the amortization. For any tangible asset, what is tangible asset? We have covered in the first chapter, which you can see, which you can touch. For example, furniture, buildings, machinery, plant, car, bike, etc. So these everything you can see and touch. But if I say a software, you have a software license of 5 years in your computer. You've bought an antivirus software, let's say it was of 50,000 rupees and it has a life of 5 years. Can you see that software? Can you touch that software? The answer is no. That is called intangible asset. Intangible asset. So there is a depreciation on this assets which can be seen or touched, because this will have the accidental damages and everything. But this software will also expire after 5 years. So for that, we call it as amortization. So intangible assets such as goodwill, trademark, patents are written off over a period of accounting years, covering their estimated useful lives. So the periodic write-off is known as the amortization. That is the amortization. This is similar to the depreciation, but the just name is different. So what I will do in amortization, same, 50,000 is for 5 years. So every year I will charge 10,000 as an amortization expense. Only the word depreciation is changed to amortization. Amortization. Okay. So that is called amortization. Now let us see the word depletion. Depletion means when there is a fall in market value of the asset, which is other than the depreciation. Okay, so this line, depletion can be distinguishable from depreciation in physical shrinkage or lessening of an estimated available quantity, and the latter implying a reduction in the service capacity of an asset. That means earlier the machine was working good, so it was able to produce 1,000 units in a day. But after 2 years, it is able to produce only 600 units in a day. So the production from that machine is now very much declined. And why it is declined? Because obviously, as it gets old, there is depreciation and there is depletion in the use. Earlier it was used for 1,000 unit, but it is now used for 600. So if I talk about the natural resources on this earth, they deplete. That is, it gets a physical shrinkage. Okay, let's talk about petrol. So if I have a 1 liter petrol and I keep it open in the air, it will evaporate. And after some time, I can see 100 ml has been evaporated or depleted. Now I am just left with the 900 ml. So that is called depletion. Depreciation is a broader term which includes the depletion, but depletion is just related to the physical shrinkage or lessening in the estimated available quantity of the asset. What is obsolescence? We have already covered that. Obsolescence refers to loss of usefulness arising from such factors due to technological changes, the change in technology, or there might be any improvement in the production methods, or change in market demand or the product output of the asset or service, or there are any legal or medical or other restrictions. So in simple words, if I say the change in technology, that is the obsolescence. Okay. Now, what is the nature of depreciation? Nature of depreciation is it is an expense and it will go to my P&L account. And what expense it is? It is a non-cash expenditure, because obviously I'm not paying anything for this expenditure. The payment is made in the first year itself when you purchase the asset. This is an expense which is a non-cash one. Okay. Then what are the causes of depreciation? Normal wear and tear, depletion or exhaustion, obsolescence, inadequacy, time element, that after some period the for example, I talked about license. Okay, license will expire in 5 years. So as per the time period, it value will form. And there might be some abnormal occurrences, that is of accident, fire, or a natural calamity which can damage the asset. Okay. So summing up, what is the characteristics of depreciation? It is a charge against profit. It indicates diminution in the service potential. It is an estimated loss of an asset. It is not an actual loss because we are calculating it on the estimate basis. It depends upon the assumptions like what is the effective life, yeah, useful life, or the residual value of the asset. It is a process of allocation, not valuation, because if a asset is of 10,000 and it has a life of 2 years, what I am doing, I am allocating the cost of asset in 2 different years, 5,000 and 5,000, in the name of depreciation. Okay, so this is just an allocation, not a valuation. It arises from wear and tear. You already know that it is charge against profit, just like your rent, salary, etc. And depreciation or any particular asset is restricted to the working life of the asset. If the asset is not workable, it is of no use. It is charged on tangible fixed asset. It is not charged on the current asset because current asset has a life of only 1 year. Okay, so it will be charged only on fixed assets which have a life of more than 1 year. For allocating the cost of intangible, we had the amortization. Okay, that is already covered. Okay, now how to measure this? We have some methods of depreciation. So we have different methods, which is called, which we are going to cover: sinking fund method, annuity method, insurance policy method, that is based on your capital or source of fund. Then we have time based as fixed installment, reducing balance, sum of year digit, double declining method, use base, that is working hours, mileage, depletion hours, and price base, that is revaluation, repairs. So in a nutshell, if I say there is one method which you need to learn, which you have already covered, that is called fixed or equal installment or straight line method, which you know, that is the same amount of depreciation which will be calculated. So the formula is same. Here V represents the cost of the asset, S represents the residual value, and N represents the useful life. So that is cost minus residual value divided by the useful life of the asset. Okay, so if you see the illustration number 1 over here, calculate the rate of depreciation under straight line method in case of following. So first, if you see, cost of the machine is 90,000. Expenses incurred at the time of purchase to be capitalized. So this will be included in the cost. For example, if I purchase a machinery and I am bringing it to my factory, so I paid some freight. So this will be capitalized. This will be included in the cost. So the total value of my machine would be 1 lakh rupees. It has a residual value of 20,000 and the life is 8 years. So simple calculation, 1 lakh minus the residual value, that is 20,000, divided by the 8 years. So this would be 80,000 divided by 8. So it will be rupees 10,000 per annum. If you see the depreciation amount, it is 10,000, which we have already calculated. If you want to calculate the rate of depreciation, so what you need to do, you have to take the depreciation amount divided by the cost of asset and multiply by the 100. So in this case, the depreciation amount is 10,000. The cost of asset was 1 lakh rupees and it should be multiplied by 100. So it will give you 10% is the rate of depreciation which is calculated. So try solving for machine number 2, 3, and 4. I've done it for machine number 1. That is the simple example which you can do very easily. Okay. Then we will do some exercises on illustration number 2. Although this is also covered if you have purchased a machine on 1st of April, July, October, or various dates. So you have to calculate accordingly. You have to take the prorated amount for which it is used. If it is used for 6 months, so it would be 6 divided by 12. If it is used for 8 months, so it would be 8 divided by 12. Okay, so total cost of the asset multiply by the rate of depreciation multiply by the time for which it is used. Okay, so we will do these questions in the coming classes. For today, that would be all. Okay, thank you all. Have a great day.